Yo, what's up guys? It's your boy Looney. Today we're breaking down some key indicators you need to know, especially if you're selling options like I am. We're going to be talking about delta, implied volatility, a little bit about PE ratio, and touching on VWAP versus Bollinger Bands. But before we get into it, quick shout out to the Discord. It is free to join, and then I also offer a premium membership that is only $8 a month, and that gives you access to one-on-one coaching. I do trade callouts. I have an option selling course. I do giveaways and more. And we basically go deep on this stuff that I'm about to get into right now. So let's get into this. Let's first look at Delta, and let's look at a stock like SoFi, because the stock has been doing really well recently. And Delta is probably the most important Greek when you're selling options. Delta tells you how much an option price moves for every $1 of the stock. So right now I have it on sell put, and let's say the delta is 0.3. 0.3 tells you that the option will either gain or lose 30 cents for every $1 move in the stock. So for sell put, I have it set here. If the stock goes up $1, the value of this option goes down 30 cents. And if you don't know, when selling options, you want the value of the option to go down, and you basically want it to expire worthless. It works the other way with selling covered calls, is the opposite direction. If the stock goes up, then the value of the option will go up, which you don't want to happen. You want the stock to sort of stay flat, and therefore you want delta to go down and not move. So don't get caught up with puts and calls, but that's sort of what delta does. Delta also kind of tells you its chance of profit or probability of it expiring worthless or whether it expires in the money. And when you're selling options, you always want to be out of the money. When you're in the money, you get assigned, which is not a bad thing, but to get the max profit, you do want to expire out of the money and expire worthless. So with a delta of 0.3 with selling puts, it's essentially telling you that there is a 30% chance that it expires in the money and you get assigned. So that means you have a pretty good chance of profit around that 70%. It's not 1-to-1, but it is really close. So I like to choose anywhere from 0.15 to 0.25 delta. That's kind of my sweet spot of risk and also premium. The lower risk ones, you do get lower premium, whereas the higher deltas are more juice, but a higher chance of it going against you or finishing in the money. Now, next thing we're going to look at is implied volatility. Let's pull that one back up because you could also read implied volatility or IV. So IV here is 55%, and IV shows how much the market thinks a stock will move. It's not actually what it's doing right now, but it's what people expect it to do. So when IV is high, options are a little bit more expensive, which is really good for option sellers. But when IV is low, there is less premium and therefore less reward. So you could always check IV rank or IV percentile. You can't do it through Robinhood, but there's other resources that tells you where the stock normally trades with IV as to where it is right now. You'll notice when there is earnings, IV will end up decreasing because IV is a lot of uncertainty. If there's a lot of uncertainty with the stock, implied volatility is very high. You don't know where the stock is going to move up or down or how much it's going to move up or down. But when earnings come out, there's a lot less uncertainty, so therefore IV gets crushed. There's something called the IV crush is what people refer to with earnings. So the next thing we're going to look at is PE ratios. This doesn't deal with options, but it deals with stocks itself. And every stock has a PE ratio. And this is good for picking stocks and whether you want to sell options or just simply invest in them. So a stock with crazy high PE ratio, like something like over 100, this tells me that it's hyped up or maybe a little too volatile. Something like Palantir that is trading at a super high PE ratio, and Tesla, super high PE ratios. So you don't want to be going crazy investing into these, or at least that's what I do. I try to not be too deep into stocks that are overhyped like that. Whereas a low PE ratio, maybe under 20 or 15, are more stable, probably a little bit better for selling options. But I like going somewhere in between because then you can get that high premium and also that stability. But overall, you do want to be picking stocks that you don't mind owning and getting assigned. So PE ratio is still part of the equation. Now let's pull up a different stock, and that's because this one is probably a good time to sell puts on. Maybe not right now, but it was about a week ago. We're going to look at VWAP and Bollinger Bands. I don't personally use VWAP, but in case you're curious, VWAP stands for volume weighted average price. And day traders use it to see if a stock is trading above or below average pricing during the day. Instead, what I like to do is I like to use Bollinger Bands. So Bollinger Bands are my go-tos. If a stock drops below the Bollinger Band, that's a good time to see that the stock is oversold. And therefore, it is a good time to get into it, whether you want to sell a put or just simply get into the stock overall. And the same way it works if it goes above that Bollinger Band. If it's above that Bollinger Band, that kind of tells me that things are overbought, and you can either sell a covered call or do some kind of other way, maybe just stay away from investing in general and just waiting for it to come back. And Bollinger Bands are based on a standard deviation, so the stock doesn't go out of those Bollinger Bands too often. It goes out of it around 5%, and then you can see it quickly comes back in. And that's sort of where you want to take advantage with selling options. Sell puts when it goes out of that Bollinger Band and sell calls when it goes above. Now, you can't time this perfectly, and that might not even happen. So you could kind of do it when it gets close to it or is below that middle line for selling puts. And just so you're curious, you can pull it up here, the Bollinger Bands. I have it on the standard version, but you can edit it to however you like. And then VWAP as well, you can add on here, but I don't use it, so no need for me. And then something that goes hand in hand with Bollinger Bands is RSI. So RSI also tells you whether a stock is oversold or overbought. If RSI is under 30, that sort of tells me that it is oversold, and that is a good time to sell puts and just take a trade. But on the other hand, if it is above 70, then it is a good time to sell calls, or that kind of tells me that it is overbought and it's due for some sort of pullback. So these kind of work hand in hand, and they're a perfect combination. And that's why I have both of them on. I even set my notifications so that I get notified if a stock sort of goes out of one of these ranges. So just to recap everything, we have delta, which goes over your probability and your risk gauge. And then you have IV, which sort of tells you your payday. High IV, higher premiums, low PE or low IV, lower premiums, but also less risk. PE or price to earnings helps pick stable stocks. This is kind of what you want to be looking at when you're initially picking a stock to get into. And lastly is Bollinger Bands and the RSI, which are my go-to for timing things, and they're a great combination. So if you want more on this, on what I do, leave a comment or join the Discord. Peace out, and until next time, happy trading.